Welcome to Dave's Market Explorer. We're sitting right around all-time high territory on the S&P 500. The index recently pushed toward the high 7,700s and even briefly tested near 7,800 before settling into a familiar sideways grind. As of the latest closes, we're hovering in the mid-7,600s. That kind of action near the highs can feel frustrating if you're looking for the next clean leg higher, but it is exactly what healthy markets often do. This is not a price correction in the classic sense. This is a time correction. Within a larger uptrend, the market can work off overbought conditions two different ways. It can drop hard and fast in price, flushing out the weak hands, or it can simply move sideways for weeks, digesting the prior gains, letting earnings catch up, and rebuilding energy for the next advance. What we are seeing now is primarily the second path. Sideways movement is the market correcting by time instead of price. That distinction matters. Tom Lee at Fundstrat has been consistent on this point. In his recent August macro update and on CNBC, he reiterated the view that we still need to touch 8,000 first. He has raised the near-term target to the 7,900 to 8,000 zone by the end of the month. The path there may not feel the way many expect. He has described the market as a coiled spring after weeks of consolidation. The bigger the base, the bigger the breakout. Lee points to rising 2027 earnings estimates as the fundamental driver. Those estimates have climbed meaningfully this reporting season, and he sees further upside. Apply a reasonable multiple and the math still points higher. At the same time, he is clear-eyed about the risks that could produce a pullback later: elevated margin debt, the market's reaction to the new Fed framework, midterm uncertainty, and the usual wall of worry that always appears near highs. Rising long-term yields globally are part of that wall right now. Yet none of those factors have changed his core call that 8,000 comes first. On the AI trade, Lee remains constructive. The infrastructure build continues, and he sees crypto, particularly Ethereum, sitting downstream of that theme. Ethereum has shown relative strength recently as the market rotates and digests earlier excesses in some of the pure AI names. The broader message is that the secular story remains intact even while the index chops around near the highs. Put it together and the current tape makes sense. We are not in a broken uptrend. We are in a period where the market is correcting by time, building a base after a strong run, and preparing for the next measurable move. History shows that these sideways stretches near all-time highs often resolve higher once the time correction has done its work. Stay focused on the bigger picture. The path can feel slow when price is consolidating, but that is frequently the healthier way for a bull market to advance. Watch the levels, respect the risks Lee has flagged, and remember that time corrections inside an uptrend are part of the process, not the end of it. That's the latest from Dave's Market Explorer. Keep exploring.